Industry NR Market Review. And for this session, we have an expert, Mr. Jom Jacob. He is a rubber industry analyst with a huge experience, well known, internationally recognized, with a huge experience in the rubber industry markets. He will be discussing about NR Market Review. Mr. Jom, sir, please come forward.
Hi everyone, welcome to the Natural Rubber Market Review. So last week when we presented the outlook for the coming year, which is for the previous year, the week just finished, 2 points were highlighted in that. One point was that we are not expecting a major uptrend or a major downtrend. This was one observation. In fact, what was our observation was that investors in futures will be indecisive. So market may move either erratically or it will be sideways movement. Sideways movement means no major uptrend or major downtrend. Another observation was that latex price will perform relatively better compared to Kapilum. These were the two observations. So we have expected latex price relatively better because during the wintering season, means a season of low supply, the latex processing factories will be offering a premium price for the fresh latex. This is to ensure that during the off season they have to ensure, that means they have to get the raw material, fresh latex. So every year, this is a practice being followed by the latex processing factories. Every year during the lean season they offer a premium price. So premium price means farmers will be prompted to, maybe they'll be encouraged to sell the produce in the form of latex rather than converting it into Kapilum. So this is one of the two. So what in that context, what was the performance of the market? How did market perform during previous week? As we expected, prices, especially in the DSR sector, means technically specified rubber. Technically specified rubber means around 70% of the global trade in rubber is in the form of TSR. So around 70% of the global production of natural rubber is processed in the form of TSR, and which is the most popular and the most prominent grade. TSR prices, we have two important markets for that. One is STR20 Bangkok, which increased 1.3% last year compared to the average 1.3% last year compared to the average a week before. In the case of SMR20 Kuala Lumpur, which is another important market, the price during last week averaged 0.3% higher compared to a week before. Then latex, we had a specific observation on latex price. Latex constitute around 12% of the global trade in rubber, or of the total production of total supply of natural rubber, around 12% is processed into latex, centrifugal latex. So latex prices, we have two important markets. One is Bangkok market, another is Kuala Lumpur market. Latex prices in Bangkok averaged 2.4% higher during the last week compared to a week before. 2.4% means considerably higher than the price of STR20, increase the price of STR20 in the Bangkok. If you come into the case of Kuala Lumpur market, latex averaged 3.0% higher compared to the 1 week before. So in the Kuala Lumpur market, SMR20, the increase was only 0.3%, but latex price was 3.0%. So it means the market performed exactly in the way we predicted last week. Now, coming to the latter RSS market, we have two important markets. One is RSS 3 market in Bangkok. It's averaged 1.5% higher during the last week compared to a week before, and RSS 4 in Kottayam, India, averaged only 0.1%, only marginal increase higher during last week compared to a week before. Now coming to the futures market were actually the sentiments were kept down due to various factors. We will discuss that. Shanghai Futures Exchange fell 0.7% last week compared to a week before. 7.7, I mean, average during last week was 0.7% lower compared to the average a week before. In the case of Psycho, the increase was only 0.03%, almost 0%. Means there is no increase at all, almost. But in the case of Osaka Exchange, RSS 3 Osaka, the increase was 1.0%. So when we compare physical market and futures market, we can observe that the price increase was more in the physical market than in the futures market. So why futures market prices were not performing well compared to the performance of the physical market? We have a number of reasons. In fact, sentiments were kept down due to various factors. One important factor was that a reintroduction of control measures, COVID control measures in China, in various provinces in China. So China is following a different strategy to counter the COVID spread. China is, while other countries are actually allowing people to move and they have chosen to live along with the COVID, China is following a different strategy, means a close down. Exactly the previous what they have done in the first outbreak. So this is so that means China is very important for rubber, because as I mentioned last week, around 43% of the world demand for natural rubber is coming from China. So China's close down is crucial for natural rubber demand, and that was reflected in the Shanghai market. So one important reason was. Then fear of aggressive tightening by the US Federal Reserve. Aggressive tightening means Federal Reserve is going to tighten the policies, means there will be higher interest rates. Higher interest rate means borrowing costs will be higher and dollar may be strong. And also at the same time, we have seen the 10-year treasury yield spiking. So that means when the treasury yield is spiking, from investors from various other portfolios like equities, commodities, they will leave those sectors and go to the treasury yield, because they always have a tendency to go in sectors having higher growth potential. So this was another important abnormal growth in the yield rate of US treasury yield attracted investors to that particular area. That was another important thing. Then we have also seen geopolitics coming into the states in the form of, because Russia is likely to, there's a possible attack of Russia on Ukraine, and US and allied and also Europe, Western countries may be intervening in the maybe also joining, maybe they'll be joining the issue. That means there is some kind of a geopolitics. So that also, when geopolitical tensions prevail, normally investors will keep away from risky investment. So that also impacted on the rubber futures and equity market. Then another important factor, World Bank, as mentioned earlier, World Bank trimmed the 2022 World Economic Outlook, and at the same time, day after tomorrow, IMF is going to release January 25. IMF is going to tomorrow, not day after tomorrow. Tomorrow, IMF is going to release the revised global economic outlook by incorporating the impact of the Omicron spread. So it means the market is expecting a downward revision by the IMF. So that also makes it, even though revision has not come out, it is widely expected that IMF is going to trim the global economic outlook for 2022. So these factors actually impacted investor sentiments, and because of that, people in the speculative market largely kept away from the markets. Then what lies ahead? What can be expected in the short term? Most important thing, when we look in the short term, most important thing, China is going for the long lunar Chinese New Year holiday from 31st of January to 6th of February. So that means Chinese manufacturing factory plants and all business activity will be closed down, and the Shanghai market also will be closed down. So means China's absence will be having a major impact on the market. China's absence, total absence of China, that will be there. So coming, even though it is coming on end of January, so maybe this week itself, China may be, the buyers in China may be less active because they are preparing for going for the long holiday. So normally companies will be buying less because of the 1 week holiday. China's factories will be buying less natural rubber. Physical market also, we are expecting lower demand from China until the holiday is over by the 7th of February. Then another thing, fear of Federal Reserve's aggressive tightening policy. Tightening policy, another word used is hawkish policy. That means hawkish policy means interest rate is going to be higher. So anytime Federal Reserve will be announcing winding up of its asset purchasing program, that means and also at the same time it will announce the schedule of interest rate hike. So that means the borrowing cost is going to be higher, dollar is going to be stronger. So this is a negative factor. This is something which is putting pressure on investors to keep away from the market. Then, as I mentioned earlier, tomorrow IMF, World Economic Outlook, is going to be released. When that is coming out, sometimes the downward revision may be higher than what the market is expecting. Sometimes the downward revision may be lower than the market is expecting. So depending on how IMF, so what is the extent of revision, what is the extent of downward revision is very important. So that's another important factor. Then and a geopolitical tension centered on Ukraine is another major important issue. So whenever geopolitical tensions are prevailing, speculative investors will be less active in not only equities and also commodity market futures also. Then another, but at the same time, we have a positive factor. Supply is going in. Now the world supply of natural rubber is entering into a season of low supply, coinciding with the wintering of rubber tree. So after the leaf falling season, the trees will refoliate, means a young leaves will be coming. So when the young leaves start coming, farmers largely give a tapping rest, maybe 1 or 2 months tapping rest. So this may not be, all farmers may not be doing, and also the wintering season vary from country to country. Within the same country, it varies from region to country, region to region, and within the same region, the wintering season slightly vary according to the clones and soil conditions. There are some, but anyway, we are expecting a off-season of supply. So that will be the only plus factor we are having. So putting together, we have a number of factors putting downward pressure, means weighing down the prices in the short term. And but at the same time, we are not expecting prices to fall abnormally because of the support from the low supply. So low supply will continue supporting the price. Maybe I would like to say that low supply will be cushioning the markets from falling large. So anyway, we are expecting either a sideways movement in price, means a marginal down, or maybe marginal up. We are not expecting a major fall in prices, or major increase in prices in the short term. So this is what is expected. Coming to the latex market, we can expect latex price gaining more, because latex gaining more in the sense that latex price will increase, or the increase in price of latex price will be relatively higher compared to the price of RSS or TSR. So this is because of the reason I mentioned earlier. So these are indications of the prices. That's all for this week's entire market review. We will see again. We will review what happened next week. We'll see again next week. Thank you very much.